This is Fintech Insider News. This week, we bring you an exclusive as Zopa's Fintech Pledge industry coalition reaches a major milestone. They're here to tell us more. Metro Bank sells £2.4 billion of mortgage assets to NatWest as the challenger bank tries to steady the ship. And Femal Invest raises a €10.3 million Series A to become the largest finance app for women. We discuss all of this and much, much more on today's show, so don't go anywhere.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Cora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
Hello and welcome to episode 885, wowza, of Fintech Insider. I'm Kate Moody, Strategy Director here at NatWest. I'm joined this week on Fintech Insider News by three brilliant guests who are here to break down the biggest stories from the past week in fintech and financial services. First up, I'm joined by my NatWest colleague and co-host, Ross Gallagher, Ventures Director at NatWest. Hey Ross, you're probably fed up with me by now, we hang out a fair bit, but can you tell listeners a bit more about what you've been up to recently?
Yeah, I mean, firstly, I could never be fed up, Kate. It's great to be here. Look, in terms of what I'm working on, I mean, lots and lots of interesting bits and pieces. We're working with lots of great, super ambitious clients, helping them really face into the future of digital financial services. So, I mean, never a dull day, Kate, as you well know.
Never a dull day. No, absolutely not. Well, thanks for making the time to come and share your opinions with us. Next up, it's a warm welcome back to the podcast for Clare Gambardella, Chief Customer Officer at Zopa. Welcome back to the show, Claire. You've got some exciting news which we're going to get into very, very shortly. But in the meantime, again, would you mind telling our listeners a little bit about you and what you're focusing on at Zopa, please?
Sure. Thanks for having me back. So at Zopa, I look after a few different areas that shape the customer journey. So brand and comms, product design, and also customer lifecycle. So thinking about the touch points that transcend all of our products and hopefully deliver a great experience for our customers. Before FinTech, which I've been doing for about 6 years, I've worked across a range of industries. So FMCG, health and leisure, and also consulting.
Awesome. Well, yeah, thanks very much for joining us. I hear a rumour that you're running a survey at the moment as well, which obviously as a FinTech and research nerd, I get very excited about. Can you give us a sort of sneak peek about what that's about?
Yeah, absolutely. We're really excited about this one. So we have just launched the Pride Barometer on LGBT plus inclusion in UK FinTech, and we're doing that in partnership with Innovate Finance. The purpose of the survey, which you can find, by the way, by searching online for Pride in FinTech, if you would like to complete the survey, is really the first of its kind to track the progress that our industry is making towards its diversity objectives. So what we're aiming to do with Innovate Finance is to get a picture of the state of play for LGBT plus inclusion in the UK FinTech industry and form a baseline from which companies can really continue to champion diversity and hopefully improve their diversity efforts going forwards while also celebrating the progress that's been made. So this is something we feel very passionately about and are very excited to see the outcomes of the survey.
Yeah, absolutely. No, I completely agree. Sounds like a really, really important initiative and would absolutely encourage anybody listening to who's able to contribute to do so. And last but not least, another welcome return to the podcast for Vadim Toda, CEO of Proportunity. Welcome back to the show, Vadim. How are things with you? You're joining us from your holiday, which is super dedicated of you. But when you're not on a holiday, what do you do day to day at Proportunity?
Thank you. Nice to be back. I think this is number 3, if I'm not wrong. Time is flying on 11FS Insider, always fun. Things of Proportunity. So I'm not sure if you guys are aware, we sold the company this year. Just a refresher. So Proportunity has been a smart mortgage lender focused for first-time buyers. We've been a beast with two heads. We've tried to always use technology to advance the financial solution available for first-time buyers, as we personally felt the pain. What we did is we created a company that forecasts house prices and basically used that information to both alleviate investor risk and highlight that where first-time buyers are buying, you have more funding opportunities. And then on the back of that, created a fully regulated FCA second charge mortgage lender to effectively fund first-time buyers above the 5 times income cap, so that they can afford more property. And we raised about 150 million, helped more than 1,000 customers buy their first home. And this year we sold that as we realized with the current interest rate environments, we weren't being able to do as much difference as we could in this method. So at the moment, I've just had a 2-year-old daughter. So the current day-to-day lifestyle opportunity is slightly different, but I'm still keeping up to date with the mortgage news network.
Yeah, absolutely. Well, I mean, sure, that's a very difficult job nonetheless. So I'm sure it's keeping you on your toes. Well, thanks very much for joining us. And with that, let's jump into the news. As always, tons for us to cover. So our top story this week is being covered in lots of different places. It will be being covered in lots of different places, but we've got an exclusive on the show today, and that is Zopa's industry coalition Fintech Pledge hits 15 million actions. In a Fintech Insider exclusive, UK Fintech Zopa have revealed that their Fintech Pledge initiative, launched back in 2022, has recorded 15 million actions. The Fintech Pledge is a coalition of 55 fintechs and their partners from the tech industry, set up to bolster consumers' financial resilience in the cost of living crisis. The aim of the pledge is to drive 25 million actions by 2025. This would amount to a fifth of the UK population taking steps to guard against financial shocks. These actions range from shifting money into high-interest savings accounts to building up better credit scores or switching to cheaper energy providers. Partner companies so far include Google Cloud and Salesforce, amongst many others. And as economic headwinds look to be improving, Zopa are looking to put the bounce back at the heart of their plans. Well, we're lucky enough to have Clare with us on the show today from Zopa. So, Clare, would love to hear directly from you more about how this initiative is progressing and the impact you're having on customers.
Sure. So Zopa is a bank which was founded in 2022, and we have always focused a lot on providing great value and easy experience to customers. And so when 2022 came about, and I think the beginning of the cost of living crisis kicked in, we were seeing from our customer research and obviously the broader media landscape the impact that was having on customers, especially customers with a low financial resilience. And at that point, we teamed up with ClearScore, who was the other founding partner of the pledge, really to see how the industry could come together and drive consumers to take actions which would help them to become more financially resilient. And as you said, there were 5 or 6 categories of actions that we focused on. Since then, we've added many more partners, and really we focused in 3 areas: either fintechs, fintech kind of partners or supporters like Salesforce, for example, and also money charities. And so bringing those 3 entities together has really allowed us to add scale and to help consumers in a variety of different ways. The 15 million actions is obviously a really fantastic milestone for us and really puts us on track for our overall target of 25. But if I were to point to some of the other results that we've generated up to this point, first of all, our funding of the money charity. The money charity is delivering workshops directly to consumers with the support of the pledge. And what we see is that people who go through those workshops start off with a confidence score in terms of increasing, in terms of their financial capabilities of 45%, and come out with a confidence score of 82%. So that's a really significant shift. We've also worked to launch the content hub, Master My Money, and that has created TikTok campaigns which have reached around 5 million views. So that's really helping us to take that type of bite-sized education into non-traditional platforms and bring awareness to more and more people of how they can take simple steps to enhance their resilience. We also have at Zopa and also amongst our partners thought about how the pledge impacts our products. A great recent example of that is actually ClearScore implementing the step change tool directly into the ClearScore platform. And that has enabled an additional 8,000 ClearScore users to engage with that in order to get money advice and take action to manage problems which may potentially become problematic debt or that might have an impact on them ongoing. So I think those are some of the examples of how the pledge is going beyond just driving direct consumer actions and hoping to create a broader ecosystem of sort of financial awareness and positive financial behaviour.
Yeah, no, absolutely. Some really, really impressive achievements already. And as you say, like this is just a step along the journey towards the ultimate goals by 2025. That example that you gave from ClearScore, actually, when I was kind of reading around what you were doing, that was the one that stood out most to me. Kind of thought that was, as you say, super impressive. I suppose I'm interested, you mentioned earlier about it shaping your roadmap as well. I was intrigued to kind of get your perspective on how much you think these partnerships have changed roadmaps more broadly. Like, do you think bringing together these different organizations has enabled, obviously we gave the specific example of ClearScore, I'm sure there might be other things in the pipeline, is it enabling companies to fundamentally deliver different services to their customers than might not have been possible if this pledge wasn't in place, if you weren't making this kind of community happen?
Well, I mean, I can't talk to roadmaps, obviously, across all of the partner organisations, but what I can say is that, first of all, we have a set of criteria in terms of how partners can become part of the pledge. And the first one is actually that they are fully regulated and that they are delivering a service which is additive to one of these goals, right? So they are helping, for example, to deliver higher interest savings accounts or helping to deliver lower cost of debt. So we kind of screen partners on, are they already able to make a contribution against those things with the products that they have? And certainly at Zopa, we really held ourselves to, do we believe we have products that deliver in each of these areas? So, for example, our debt consolidation calculator to lower the cost of borrowing by consolidating debt in one place, our borrowing power tool to get a good view of your credit score, and how you can access borrowing at a great rate if you need to, and obviously high interest savings accounts. So products like that, we feel, put us in a strong place already to go after and help consumers in those areas. But certainly, I think across the pledge, it has really brought to the forefront of the discussion for all of those companies how their products can serve better in those areas, because obviously we've put a very tangible target on the number of customer actions that we want to take. So that has definitely, I think, helped to surface this discussion and made it a really top of mind element across the full partnership group.
Yeah, no, absolutely. Ross, keen to bring you in. What's your take on this story and this news?
Well, Claire, first thing I just want to say is congratulations. And I'm so pleased that you sort of went through and mentioned the products that you did, because I was going to follow that up with, I know that it's such a core part of Zopa's brand and Zopa's values, that whole thing around like inclusion and treating customers fairly. And actually that there's a huge credibility, I think, that comes with you guys doing this that I think is really important. I think obviously, I mean, look, the cost of living crisis over the last couple of years has just had such a damaging impact on people's household finances. And so you can see, I think, reflected in the numbers, the millions of actions, Kate, that you mentioned, that I think people have been more aware, more conscious, more engaged with their finances. And it is good to see people thinking about these things and taking action to improve their financial position, their financial resilience. I suppose the key bit that sort of grabbed me then is the focus on how do you start to keep people engaged as maybe some of those economic pressures ease, right? And I'm not saying that by any stretch we're out of the woods. But I guess we all know that we should be making hay while the sun shines. But I suppose we also know that in practice, people don't always do it. But yeah, I mean the numbers themselves are really, really impressive. And you know, the thing is, we all think about financial resilience on the individual level, but actually, when you have financial resilience on an individual level at scale, then that's the fundamentals of a strong economy and kind of the backbone of everything, really. So there's a bigger picture piece here as well that I think is really important.
Vadim, what were your takes on this? What were you most interested in?
I think it's interesting. I think you're right in terms of thinking that, what's the expression? Making hay while
the sun shines. Yeah.
I think this is definitely a lot of what we've seen with kind of first time buyers and people in the early 20s and late 20s, early 30s is that it's definitely a time when they're feeling the pressure, right? Whether they were a person or whether they were an owner and their interest rate has gone up, so all of a sudden like the expense will be higher. So any helps if you can put your savings into a higher earning interest rate account, or just a kind of education to show that, okay, there's the things I could be doing. I think a lot of these things can help. I feel like it's a step in the right direction. However, kind of being within the age group and knowing people within the age group, I also know that I always feel like these situations are never enough. Because, okay, you don't have savings, right? Like, unless you're, I think in fintech, sometimes there's a lot of software developers who end up not realizing that they're in a bubble where their salaries are a lot bigger than other people's. And then the fact that they do have 50K or 100K of savings makes them very different than the average population. So I think there's a lot more to be done within this space. But it's definitely a good move. We support it.
Yeah, no, for sure. And I guess, Claire, what's next? Like, obviously you've hit this milestone. You've got a roadmap, I guess, ahead for the pledge as a whole. What can the industry expect to see coming through next?
Yeah, so we're aiming to reach 25 million actions by 2025. So we're working on that now with our partners in terms of what we need to do to get there. The thing that we're working on right at the moment is a consumer impact report. So what we really want to do is understand a little bit more about how has this changed consumer behaviour, and also actually get some insight into exactly, as you touched on, how are people feeling now, what's next for them, what's top of mind for them. So I think this is a great inflection point for us to do a bit of a deep dive and understand, what impact have we had on an individual level so far, and where do we go from here? So those are the two things that we're working on at the moment.
Yeah, no, absolutely. And I suppose, again, when I was looking through the site, the Pledge's site, I think one of the things that I thought was most interesting, you've got kind of your 5 kind of key principles for how you kind of manage the pledge. And the last one was measurement. And that's something that I think when we speak to financial services partners and clients, I think there are lots of very good intentions in from fintechs all the way through to kind of some of the biggest incumbents of financial services to take actions which benefit customers, but there doesn't necessarily always seem to be knowledge and understanding about how to measure that. Obviously, big financial incumbents are used to tracking measurements which just relate to financial products, and they're not necessarily sure how to measure these kinds of outcomes. And so, again, not saying necessary to solve now, but I think that would be an amazing outcome from this initiative as a whole if you and all of your partners could really try and help the industry to generally understand how maybe we could shift some of the measurements of financial services more broadly to really try and support this kind of change and this kind of customer outreach on an ongoing basis, because I think that would be huge if we were kind of talking about these types of measurements in perpetuity and not just within the context of the financial crisis that we've been in recently.
Yeah, I mean, I think that is, I guess, the holy grail, and I think it's really challenging to do. It's a conversation we've had a lot because obviously there are so many factors that impact people's finances, and a lot of variables. So I don't know how far we'll get along that road. We'll certainly try, but I think what we have tried to do is to be quite considered as we set up the pledge around what we felt confident being able to track and put a number against and judge ourselves against. But I do agree that for the industry, there's a really big challenge on how we understand the contribution of the financial products to a customer's overall situation ongoing. And that's, I don't think that anyone has quite cracked that yet, but who knows, maybe we'll get there soon.
Absolutely. And if you work it out, you absolutely have to come back and tell us so we can tell everyone else.
I absolutely will.
Well, Again, as Ross said, big shout out to kind of the whole team, yourselves, ClearScore, everybody else who's kind of working on this initiative, and fingers crossed you can continue to kind of go from success to success. Going to have to move on to our next story now, because as always, we have many, many, many things to cover. This story we've taken from Finextra, but again, covered in multiple places. And that is NatWest buys Metro Bank's £2.4 billion mortgage portfolio. Metro Bank almost collapsed last year following a profitability crisis and a botched attempt to revamp their rating systems for assets and mortgages. This was part of the discussions around their £600 million refinancing last year. They've been lining up this sale since October, when the bank received a lifeline in the shape of £325 million of new funding. The move further bolsters NatWest's growing credit portfolio. They picked up the remaining assets and liabilities from Sainsbury's Bank back in June, and NatWest shares jumped up 8% after the announcement. Vadim, you declared at the beginning that you were our kind of resident nerd around kind of all things mortgages. Did this put all of your holiday excitement to one side? Is this kind of the most exciting thing you've heard this week? How does that give us some context about how big a story this is?
If I would say this is the most exciting this week, I think I would have a pretty shitty life. No, it's actually not a surprise. I think it's not there's multiple angles to commentate on this. So first of all, I think this is a follow-up. They did about similar amount in 2020. So effectively, they kind of kept doing what they were doing. I think the one in 2020 was a bit more beneficial to them than this one, as back then there was less of a gap between the rates they had lent at and the rates in the market. So therefore, those loans were probably bought at par or at a premium. Well, I think these loans are more of a save me loan. So it's a distressed asset, given that the interest rates on their book is probably much lower, since a lot of these loans are older. From what I saw, the average LTV was 60%. So I think you'd assume that they're at least 5 years old. And that would tend to mean that the interest rates on those loans is much lower than the latest interest rates in the market. So therefore, it was a combination, I think, of the government telling NatWest buy this to save Metro Bank, and Metro Bank probably not getting for them what they were worth in a few years. So they did this, as you said, as a condition of their funding last year. But yeah, I would say it's not surprising, right? It was probably the easiest thing. NatWest had bought the portfolio, and NatWest bought. And also, I think Metro Bank doesn't really impact NatWest's portfolio because they're so big. I remember when we were talking to them, they want to buy everything, right? Because they have a lot of low funding costs. And Metro tends to be quite particular London-based lending, while NatWest is very spread. So in many ways, this is the perfect fit if you want to be saved by someone in this period, because NatWest has so much that your portfolio will not impact it. So therefore, they will be willing to pay a bit more of a premium than a different lender in this situation. I think the interesting question is, are we going to see more people like Metro Bank selling portfolios to NatWest? And how is this going to leave what's NatWest going to do in a few years when this interest rate environment settles, and all of a sudden they have portfolios that are at market that they could sell for a premium?
Okay, interesting. Ross, what do you think?
Yeah, I think Vadim's exactly right. I think, to call it a distressed asset, basically a save me loan. I think that's exactly right. I think all the signs are there, right? Metro have been struggling for a long time. Yeah, whether you want to call last year's injection funding or a bailout, I mean, I think it's all the same. I think the reality is the last thing a regulator needs from an oversight perspective is a well-known high street brand struggling or failing and everything. From a contagion perspective, look, we're not that far removed from Signature Bank and Credit Suisse and SVB, right? So it makes sense from that perspective. I think in a wider sense, like becoming a high street bank and then becoming a high street bank at scale is really hard. And Metro's model also has some really fundamental cost challenges. Like branches are expensive, and they're especially expensive when you're scaling very quickly, and they're especially expensive in a high interest rate environment, right? And Metro's promise was our branches are going to be open longer. They're going to be open more days in the week, right? So, from a people cost perspective, that's huge, right? And so let's not forget that of that they've made, I think, £80 million worth of savings to hit the sort of profitability projections. Part of that is they've let go around 1,000 people. That to me is interesting because, all right, great, you're facing into the future. You're a leaner business. You're a more cost-effective business. So that increases your resilience. But I do think there's a really interesting question mark now about where Metro goes from here. Like, if they've eliminated all of those people and they're stripping all of the cost out of the business that underpins its sort of like enhanced customer service promise, like, what's its USP moving forward? Like, is it just on a path to becoming another high street bank, but smaller? I think that's a big question mark for me on this.
Claire, you got any hypotheses? Obviously, you guys at Zopa do loans as well. Have NatWest come knocking for your portfolio, or is it just business as usual for you guys?
No, I mean, we don't do mortgages. So we offer unsecured lending, as you know, and also auto lending. So it's quite a different proposition. I mean, not being in the mortgage space, I'm not an expert here, but I mean, what I understand is that the fundamental difference is that because the big banks can access so much low-cost funding, this is an area where they really excel and have a huge amount of scale in mortgages. I think with unsecured lending, there's more margin. So actually, it's easier for us to have a value-led offering, which delivers for us and for the customer. So it's a somewhat different dynamic, I think. But yeah, it'll be interesting on the Metro front specifically to see where they go from here. I agree with you, Ross, that the key thing for them is, in my opinion, is going to be how do they recraft their value proposition for customers, and what is that offering going forward. So I guess time will tell on how they shape that and whether that is successful.
And maybe it's about just going back to the core of what made them unique at the beginning, right? Let's not forget they were, I think, the first high street bank in the UK to get a banking license in something like 150 years, right? Like, the core of the offering, the proposition, there is appetite for. Since they've come to market, we've seen waves of disruption on a sort of digital only platform, but that doesn't necessarily mean that there isn't room to disrupt on the sort of like high street side of things. But it's just figuring out how they can do that sustainably, and then what actually is a reasonable path to scale.
Yeah. And obviously, as Ross set out, Metro Bank aren't a sort of traditional digital challenger. Like, they've challenged in many ways, but they're not a digital challenger. Vadim, like, do you think this kind of story will put other more digital challengers off going into this market? There's been lots of speculation about, will Monzo go into mortgages? Obviously, they've started to allow you to see like your mortgage in the app, but would they kind of go deeper into that space? Revolut's UK CEO was working for a mortgage-based fintech before moving to Revolut. So there's been lots of speculation about whether we could see UK fintechs in particular kind of start to move into mortgages. What's your take? What's your prediction?
I think you will start to see more, but I think you can look at Monzo, right? Because Monzo's had the license for a few more years before Revolut. I think the appetite, they definitely want to do lending because it's an optimal time to do lending. Interest rates are at all-time high, and also they're all focused on profitability, right? So you're not going to make money from, like, they kind of capped out whatever they can make from card businesses and so forth, and they need to add on a different revenue stream. However, if you look into lending, I think, as you guys were alluding to, mortgages is not the easiest money making opportunity. Yeah, and it comes with intense regulation. I think Revolut, after suffering for 3 years to get one banking license, I think the next thing that they want is probably not to jump into a mortgage license issue. So I would see them go down the route of Monzo, which is do all this kind of higher interest rate, unsecured. Sorry, I'm having a lapsus. What do you call when, like, the overdraft lending? I think that's usually quite easy to offer and quite adjacent, and probably opens them more profit. I think over time, it's interesting because I was thinking as you guys were talking exactly that. If you had Metro got a license, but they also got Adam got a license, and Adam's kind of doing a bit better, but they're also pulling their IP, all right? They're in that we want to grow, but we don't know how to grow. They're doing better at mortgages, but they have their own challenges. And it's a very interesting question. I think it's going to be hard for Metro to come back and figure out what they want to do, because now, okay, you want to serve customers better and it's not through a bank, it's through digital, sure, but you're going to have to compare with a range between Atom Bank, Tandem Bank, because Tandem was kind of also, they bought Harrods, right? So they kind of had to do this a couple of years ago, and they bought a bank that didn't make sense anymore and then with PE money, they thought a lot about what's and they went kind of the green mortgage route and tried to cost very effectively. So I think it's a huge challenge for Metro, and I hope they solve it, but it's not going to be easy. And there is a likelihood that one of these digital banks will come in and swoop a failing Metro if it doesn't do much in a couple of years. And that might be the cheapest way for them to enter this market. But from what I've heard unofficially if they do go into lending, it won't be in the UK. It will probably be because they've had a European banking license for much longer. So lending in Ireland or somewhere else will probably be a much more first step, and then the next one in the UK. Once the competition kind of calms down. Sorry, that was a long-winded answer to this. Hopefully it made sense.
No, it absolutely makes sense. And I think you make some really, really fair points about different challenges faced by different fintechs in the UK ecosystem as well. They've all got different priorities, different sort of licensing histories, different customer bases, and different strengths. So yeah, no, I think a very fair analysis. On that note, we're just going to take a quick pause here. We'll be back very shortly. Welcome back. Before we get back into the news, we want to tell you about our latest Insights show. Go Cardless is currently going from strength to strength on its route to be the world's bank payment network. To find out how, David M. Breer went down to their global HQ to sit down with co-founder and CEO Hiroki Takeuchi. Tune in now. It's the podcast just below this one on your feed. Now, back to the news. Okay, our next story is taken from Finextra, and that is Westpac to offer debit cards to 8-year-olds. The Australian neobank Westpac is set to offer debit cards to children as young as 8. That's almost half their previous minimum age of 14. The newly reduced age limits come with a suite of new parental controls, including spending limits and notifications and veto powers over transactions. A survey carried out by Westpac found that more than half of parents want their kids to have a debit card so that they can learn about money. We asked our LinkedIn followers if they thought 8-year-olds were too young to have a debit card, and the results are in. So 41% said yes, too young, 44% said no, good for learning about money, and 15% said it depends on the child. I probably should have polled this before we actually started recording. I know that I have a child. Claire, Vadim, you mentioned obviously you've got kids as well. Claire, have you got any small humans you're responsible for? Or?
I do. I have one very small human.
It's a difficult job. Would you be happy for them to have a debit card at the age of 8, Claire?
I think so. I actually really like this idea. I think that I don't see much difference between giving a child pocket money back in the old days, which would be cash, and giving a child a loaded debit card now with some good parental controls around it. Because, we are increasingly seeing a cashless society. We're increasingly seeing a move to contactless payments. And I think that one of the challenges with that is that actually learning to think about money and transaction without a physical transaction happening is really, really important for how people budget and how people think about financial responsibility. So for me, it seems really odd to say, no, we have to give children physical money. But then actually at the point where they're, whatever arbitrary age, they move into a world of cashless payments and digital transactions, and we expect them to kind of understand that. So I'm all for this with appropriate controls around it.
Yeah, no, I think that's absolutely fair. I think the thing which I'm probably most concerned about for my son is not like about him being able to go into a shop and tap something with his contactless card, but more like, he's also, I assume, going to have access to the internet, which I did not have as an 8-year-old. Or I think quite a few of the cards you can have from the age of 6. So, if you're a 6-year-old with a prepaid card and when your parents are distracted, I don't know, cooking your dinner or trying to stop the house falling down, and you steal their phone or their computer, and you can you just go on Amazon or worse places and buy whatever you want. I think I suppose it's that online shopping environment that I'm most interested whenever one of these new propositions comes out, to kind of look at the parental controls that are available, to look at the ability to set blocks and permissions. And I think that's, I was starting to look around, trying to find some of the detail around precisely how the Westpac experience will work. And obviously it's very difficult to see in detail until we've actually got access to the journeys, which I'm sure we will hopefully have on M-Pesa Pulse at some point soon, so I can stalk it properly. But I think they have mentioned that potentially there will be some specific blocks around, or not blocks necessarily, but specific additional approvals needed around e-commerce, online shopping transactions. And that to me kind of would make more sense if you kind of had a sort of secondary approval before you can buy anything online. But all of this is dependent on the stack that you have behind the scenes, right, Ross? And I think that's where we've seen lots of incumbents look to launch offerings, but I think they found it harder maybe to configure some of these parental controls. I don't know what your thoughts are.
Totally. Yeah, exactly. Being able to trigger those notifications in a way that is real time. I think that's super important. I think the controls are the key point, right? I mean, the reality is this is nothing new. I mean, we've had parent and child apps around for years, right? Rooster Money, Go Henry. But I think it is good to see a big bank like Westpac embracing this, right? I mean, when you think about the reach and scale, I mean, I agree with Claire completely. I think this is absolutely the right approach. It's our responsibility really to teach our kids good money management skills and everything that we've talked about earlier in terms of building good financial habits, good financial behavior, starting that from a really young age, and then that following, sticking with you into adulthood. And I do think this is the right way to do it. And Kate, I completely take your point that yes, the online purchases are the wild card factor, but how many times have we heard about young kids on their parents' iPad playing a game and without unbeknownst to themselves spending hundreds or even thousands of pounds on in-app purchases. So I think this is definitely a better alternative to that. But I think with the caveat that this isn't just carte blanche, right? This is a controlled way for kids to learn how to manage money in a safe way with sort of those parental controls and those parental vetoes.
Yeah. Vadim, how are you managing? Has your small human got their own sort of holiday spend card? What stage are you up to?
So we have a 2-month-old and 2-year-olds, not quite there yet. Or at least I'm not aware if they have one. But no, I think I totally agree, because I think I was thinking about it from a different perspective, because Westpac, I think previously were doing it for 14-year-olds, and now it's lowering from 14 to 8. Right. And I was just thinking about that. And I think there's probably a couple of elements. One, you're totally right. You can use it as effectively a gatekeeper, right? Because as you use this card for all of their expenses, being the apps on their iPad and so forth, all of a sudden, if there's any expense above £5, you get an announcement. So it's a lot more awareness. You could also probably build in all the education, like, okay, you want to get a whatever PlayStation or whatever these kids want. Then, okay, you need to save £5 every month, and then you get there, and then it's easier to kind of they see that and highlight that. So I think there's a lot of beneficial stuff. I think it could also be, my entrepreneurial hat is, this is the market that you can get a lot of benefits by being the first mover advantage, right? Because I agree. I don't see it so hard to get it right. Like, there's been enough apps. Like, if someone want to start a company today to do this, you would have blueprints, you would have mechanisms that aren't incredibly hard to identify. So I think it's not the biggest challenge is not executing this right. It's more just not executing it terribly badly and being first. And then if you have an element of education on the side, which I think is going to play key, then I could totally see it as a new niche. And what I'm interested though to see is why Westpac didn't work with a company. Why did they decide to do this on their own versus work with a Go Henry? I think that's kind of, I'd be interested to hear a bit more about that internally.
Yeah, I mean, it's hard to tell based on the initial releases. I have some hypotheses based on, it's like when you read some of the blurb around the release, so you see some of like the conditions they've attached. So, you can open some of these accounts online as long as you also open at the same time a savings account for your child. If you don't want to open a savings account at the same time, you have to do it over the phone or in branch. So they're kind of adding in this friction, or I'm assuming they are adding in friction to kind of encourage people to kind of open the savings account at the same time. So again, maybe they're seeing this as like a dual play to kind of try and build those deposits, kind of get parents and grandparents paying into those accounts, which again makes total sense. But yeah, there were some interesting nuances around kind of how you got access to this product that I couldn't work out if it was just a nuance of the Australian onboarding requirements, or if it was Westpac making some deliberate choices to shape how people are taking up this product.
Yeah, cross-sell.
And cross-sell.
Exactly.
Yeah. I think the thing that I'm really interested in this space is, I think you're right, Vadim, like, I don't necessarily think at this moment in time it's that hard to steal with pride kind of the basics, the core essentials of these offerings from things which have been in market for a while, that have explored some of these spaces and kind of found this best fit, and you found some of those parental controls that Claire was talking about at the beginning. I think what becomes interesting almost is once we have this baseline of it being relatively well accepted that kids can spend and kids can have prepaid cards, what do you add in next? And I think you start to look at some of the offerings. So if you look at Greenlight, for example, in the US, a really well-established player in this space, like they are already sort of starting to allow, I think, predominantly teenagers, although it says on the website, we support kids and adults of all ages. So your 2-month-old could get a card if that is actually true. But they're sort of now, their offering allows kids to start to move into the investing space. So a child can research and propose trades that their parents then have to approve. And so again, I think that to me becomes the interesting space. Like by the time my recently turned 3-year-old is 6 and I have to actually make the decision about which card to sign him up for, because I inevitably will get my card, where will this space have evolved to by then? Like what level of financial actions will we be exposing our children to? And I think that for me is super interesting. So maybe we watch this space and we reconvene with our slightly older children, because it sounds like we've got a good cohort of small humans. Maybe we as a 3 can reconvene in a few years' time and bounce some ideas for what we want to do. Ross, you can bring Louis the dog, say, and because I'm sure he'll need a prepaid card as well. Why are dogs excluded from this? I don't understand. It seems very unfair.
He has very expensive taste, so I don't think we need
a savings account.
Yeah, he needs a savings account.
Yeah, true.
It's fun.
Okay, moving us on to our next story. This one is taken from EU Startups, and that is Femal Invest scores €10.3 million Series A to be the largest finance app for women. The London-based financial platform Femal Invest has secured a €10.3 million Series A, making it the largest finance app for women. It's aimed at connecting women to financial educational resources, investment advice in the biggest community of its kind. Since it was founded in 2019, Femal Invest has amassed 73,000 paying users across 123 countries, with a social media following of more than 500,000. This Series A comes alongside a record-breaking crowdfunding campaign with more than 12,000 pre-registrants and $1 million raised in just 4 minutes. The company has secured major endorsements from A-listers such as Hillary Clinton and Emma Watson, and their founders have written the Sunday Times bestseller, Girls Just Want to Have Funds. Ross, what are the root causes of the investment gap between women and men? Start off nice and simple.
I think representation's a big problem. I saw a LinkedIn post written by the founders, and they talked about their experience trying to raise capital in a more traditional route like VC, and walking into rooms and not seeing any women around the table and actually leaving feeling completely humiliated. And in many ways, this is just a real victory for like diversity, sure, but also just common sense, right? They then went on to crowdfund and a record raise. I think they brought down the platform a couple of times. Like, people really buy into this. But yeah, I mean, until you solve that problem around representation, I think they're always going to be at a disadvantage, which is really, really sad. And especially when you think about, like, as an industry, we should be holding up people like Eileen Burbage and Passion Capital. And when you look at her backing Tom Blomfield and Monzo in the very early days, and of course the success that they've gone on to have, I think that representation point's absolutely huge.
Yeah, no, you couldn't agree more. Claire, what was your reaction to this news?
I mean, I think it's fantastic news, and great job to them. I do think it's kind of sad that it's an idea that had to happen, because to Ross's point, I just feel like the industry as a whole should be doing so much better job here, given, we're not talking about a niche group here. We're talking about, an enormous part of the population. So I'm sad that it's still needed, but great job to them. I think that I was actually doing a little bit of reading before this, because I was really interested in some of the stats that came up around the fact that, for example, 70% of investments are still owned by men, for example. And that's such a skewed number that came up in the article about this. It really made me wonder why that was. And actually, what I saw in some of the papers that talked about women's attitude to risk is that a really big factor, especially when investing, is not necessarily knowledge. It's actually a difference in how women rate the risk of loss, almost. So actually, I think that a problem has been is that the way that the industry has potentially tried to solve this in the past is thinking that it's just about education, or it's just about talking to women in a different way. And that has obviously sometimes played out really badly, because it feels patronizing, or it feels like the industry is leading into stereotypes. Whereas actually, I think thinking about how can you accept that, many women have different biases to men, and actually address that head on, create products that work well for them, really think in a much more consumer sensitive way about what might free up some of those barriers at a deeper level. I think that's something which I would love to see. I do also really agree with Ross's point that this isn't only about how the industry tackles the problem of women having less pension saving, having less pension investments, having less financial resilience. It is also about how we make sure that we as an industry are representative in order to have the insight and have the kind of openness to create those products and those solutions. And I mean, that's something at Zopa we focused on a lot. Just under 50% of our management team are female, and 50% of our leadership team are female. And I do think that makes an enormous difference, because it makes sure that when you're talking about these type of topics, when you're designing communications, when you're designing products, you do have a really great spread of opinions and diversity around the table. So I think more of that when we're thinking about access to funding as well for these type of entrepreneurs is really, really important.
Yeah, no, absolutely. Could not agree more. I thought it was super interesting when, again, we talked about Monzo a little bit earlier, but obviously they have relatively recently rolled out their investment feature, and we had the opportunity to interview their CEO, T.S. Neal, and he talked a bit about that and about the kind of some of the early stats coming out from that rollout. And he was saying it was really interesting, when they looked at the stats across, customers as a whole, people who had onboarded into that flow, 30% of all customers said that this was the first time they were investing, whereas when they just looked at the women who were going into this journey, 45% were saying it was the first time they'd invested. So again, it sounds like something that Monzo is doing is potentially starting to address some of these points that you raised, Claire. And I think when he split down into kind of the two key things they focused on, I think the first point he made was sort of around the education point, but it was more specifically about trying to make sure that things are explained clearly, but that there's no jargon, that things are easy for people just to kind of get their heads around, which I don't think was specifically about women. I think that was about sort of first-time investors generally. And then the second point he made was around trying to really reduce that perception that you can only invest if you have a lot of money. And again, I think so they've kind of gone in with that initial offering that you can start with just £1. And again, to your point you're making around risk appetite, that to me could also be really huge, allowing people to invest small amounts and start to build confidence iteratively over time could hopefully help to address that kind of deeper difference in sort of attitude towards risk, that might be one of the many things which is holding women back from realising their full investing potential. So yeah, I think I probably should go. I'm actually one of those 73,000 paying users of Femal Invest. So I haven't actually. I suppose this is to me what's interesting. I have moments of realization that I don't, despite, hosting a podcast all about fintech and financial services, I don't know as much as I wish I did. I don't make the smartest decisions with my money. I don't do everything that I believe I could. And you have these occasional moments of sitting back and thinking, like, I need to do smarter things, make smarter choices. And I think it was in one of those moments that I stumbled across Femal Invest and thought, you know what, I'm going to take the time, I'm going to learn more, I'm going to upskill. But I think there is still a big gap between having that moment of realization and then translating that through into the actual action of, now I'm going to take some money and I'm going to do my first trade, or I'm going to put the money here. So I think for me, that will be what I'm really interested to see, if this funding helps them to move. Obviously, they do a really great job around that educational content, around that community building, around that support. But I think unless that helps people to really actively take the steps into investing and to then take those first steps and then evolve onto the next steps and build and build and build, the impact that I know their founders want to have is going to be limited. So yeah, I'm really hoping that they can use this Series A to move beyond education and into just doing more and more and more. So we shall see. Yeah, sorry, I probably just had a bit of a personal crisis, just as realization as we've been talking through that. Ross, this is a record-breaking raise for Femal Invest. Do you think that signals sort of a bigger appetite amongst investors to fund female-led and female-centric projects?
Yeah, I actually really do. And I think when you look at it in the context of where we're at more generally with fintech investments, the market's been kind of dampened, and we have moved away from, the sort of the market a few years ago where you could secure these crazy valuations without having done a right lot. I mean, I think now investors in this space are really looking at the fundamentals of the business. And so, as I say, I mean, look, you only need to look at the crowdfund, you only need to look at some of the names, some of the big high profile names that have backed this. And I think there is also, like, there's a social movement element to this as well that I think really inspires people. And so, yeah, I wouldn't, in the current climate, in the current context around raising investment, I don't think you can really understate this at all.
No, fingers crossed. Okay, we'll keep our eyes peeled to see what they do next, but fingers crossed, and congrats again to the team on the raise. So, okay, now time for a quick look at some more click-worthy news stories from this week that we don't have time, sadly, to cover in full. Our main story in this section is taken from Fintech Global, and that is M&T Harlan expands into Turkey with the acquisition of Tams Finance. More good news for the poster boy of Egyptian fintech this week, as M&T Harlan acquires Tams Finance to expand into the Turkish market. Just last week, the company, which is the biggest non-bank financial institution in Egypt, raised $157.5 million in funding. They have more than 7 million customers in the region, sidestepping the incumbent banks by offering easy access to prepaid cards, e-commerce and consumer loans. With this move into the Turkish market, M&T Harlan inherits a $300 million loan book and can look to target an 85 million population that is largely untouched by fintech. This is another major international expansion for the firm following their acquisition of Advance Pakistan back in March. Ross, what's your thoughts? Have you been staying close to the Turkish fintech scene?
Well, you know what, actually, I mean, I can't say that I have. And so this is look, we can often be guilty, right, of getting carried away with what's going on in some of the more mature markets, right, from a fintech perspective. But this is a good reminder that there are still lots of less mature markets out there where, like, users' needs are still dramatically underserved, and actually done in the right way, fintech can have an enormous impact. I think especially when it comes to expanding access to people who've been excluded. So yeah, I mean, look, I think these are definitely positive moves in that sense, right? And I am sure it's one that we'll continue to keep an eye on, especially with a name like poster boy of Egyptian fintech. I mean, how can we not keep coming back to that?
Yeah, and I think both Egypt and I know we've definitely kind of put a spotlight on Egypt on the show a few times. Really, really interesting market. And yeah, I think maybe Turkey we should turn our attentions to next, because 85 million people deserve to have fintech in their lives, and fingers crossed this is the start of it for them. Okay, time for the final section of today's show, and finally a look at something a little bit more lighthearted from the world of finance. This has been taken from LinkedIn News. Allegedly, a fifth of workers say they will watch the Olympics in work time. Shocking. More than a fifth of workers say they'll be watching the Olympics during work time, while 58% say they will absolutely not be. That's according to a poll conducted by LinkedIn News. In a survey conducted by LinkedIn last year, they found that 80% of those who regularly work from home end up watching TV during working hours. Okay, confession time. Who's been watching the Olympics? I mean, Vadim, you're on holiday, so you're allowed to be. Are you watching the Olympics on holiday? Or have you ditched the Olympics whilst you're on holiday?
No, I think we will reenact some Olympic challenges as one of our friends getting married. That's why we're on holiday. So we have a long list of challenges for him to do. But no, I don't think we have much time. We watched a bit this week. We were happy when Britain won gold in the relay race for men, the 4x200. That was pretty cool. I think it's the first time in history where they defended gold, the same teams, from the last one. So that was nice. But yeah, unfortunately, not much Olympic watching here. The only thing I'm going to say is if 20% of people or 50 people say they're watching it, then that definitely means everyone's watching it.
Well, yeah, 58% absolutely ruling it out feels pretty high to me. Ross, am I being overly critical here, Ross? I mean, I just assume they're all lying. Am I being overly judgmental?
Yeah, I agree. I think they're lying. I mean, I think even if you aren't a big sort of sports fan, I mean, I think there's so many great moments that come out of something like the Olympics that I think we can all appreciate. And so even if you're not, sat watching the women's triathlon from start to finish, right, then that's absolutely fine. But I think, Kate, I know you were particularly excited about Tom Pidcock getting his gold medal this time out, and it may have distracted from a particular call that you were on.
Jeez, just dobbing me in on off recording. Yeah, no, it's difficult, isn't it? It's difficult to keep your focus. As I was wandering around the LearnFest office today, I saw quite a few screens that had like a little window on the side where people were watching. So, but I mean, actually, we're not watching it live. Like, we're not watching it now whilst we're recording this podcast, which I feel allows me to justify watching it, tomorrow. Because I haven't watched it now. Clare, is it on in the Zopa offices? Have you guys been getting big into the Olympics?
It is on in the Zopa offices, and I think I was saying earlier, I'm not really big into sport, so it's not really a big thing for me. But by osmosis, I have seen bits and bobs walking past the big screen in the kitchen. So I think we've sort of leaned into the fact that people are going to want to keep up with the highlights and made that a bit of a social moment. So I'm glad people are having fun and enjoying it. It's always a really great occasion, and we have a lot of different nationalities at Zopa. So it's actually a really fun conversation because people get a little bit competitive and swap stories. So it's a nice way to bring people together because it's so international.
Yeah, no, absolutely. Even if you're not massively into the sport, I would recommend watching the Olympics with a small human narrating the Olympics, because actually hearing like a 3-year-old very objectively describing sports is very entertaining. Like, my son had the gymnastics. Like, we picked up my son from nursery yesterday, and I think the men gymnastics all around part was on, and listening to him sort of very, very pragmatically describing all of these amazing feats of athleticism was definitely something I would recommend. So if you have a small human and you're a bit bored, get them to commentate on the Olympics for you would be my top tip. I've been given a closing question, which I'm sure we'll all be very excited for. So, Vadim, if you had to be an Olympic athlete, in which event do you think you would have the best shot?
I think I wouldn't necessarily know. What's that one called when you're shooting and you have to run, or ski? I forgot the name.
Yeah.
Is that like the modern pentathlon? Is it modern pentathlon, which involves shooting? I can't remember.
Yeah, because I saw that's where you can have the oldest playing person they're still competitive. It was like that in ping pong, but the ping pong one was just like a Chinese prodigy that came back where she was like 50. That I'm buying myself the most time to be a decent shot, and I added a short time. I would say that's probably the one I'll go for.
Fair. Claire, what are you gonna chuck it all in at Zopa? You can have it. The next Olympics can be yours. You can be up there. What are you going to be doing?
I mean, I don't think anyone needs to worry too much about this scenario, but I'm not very sporty. So I would say, though, I am a very fast walker. So race walking would definitely be my event. If there were extra points for doing it in really high heels, possibly while texting, I would absolutely nail it. That would be my Olympic event all day long.
That does sound like it deserves to be an Olympic sport.
I've tried it as well, like especially like that. But the speed walking, where I think you always have to keep like 1 foot partially on the ground or something. Which when you just hear it, you think, well, of course, and then you actually think about when you're walking what you're actually doing. It's really, really hard. But no, absolutely backing you.
See, this was more of a vision for me. I hadn't got into this level of detail, but
next time.
And you have to be very alert. I think I've seen an event where the person winning it got a bit cocky and like stopped to look back, and for 1 second, and in that 1 second the person was right next to it overtook her, and you can't sprint because then you're not walking anymore. So she lost in the last time.
It's kind of like being in the tube.
Yeah, exactly. So it's if you do that long distance, I think it's a true challenge. Yeah,
I reckon it's really, really hard. Ross, what are you going to go in for?
Well, I was just in response to Claire's. I drove past someone who was in the rain, walking, reading a newspaper, and like a broadsheet, the big ones. And I was like, so I think you've got some competition, Claire.
Wow.
My initial reaction, Kate, is if I go for like a team sport, then maybe that sort of the rest of them can like make up for my shortcomings. So maybe we could go like football, but I could do like Gary Neville right back, and I'd survive.
Okay. That feels sensible. I honestly don't think I've got a shot at anything, to be honest. I think that I watched part of like the synchronized diving, but the one from the really high diving board, the one that's like 3 meters. I think maybe I could do that one, but like the best I'd be able to do would be like a synchronized like dive bomb or something. I wouldn't be able to do any of like flips and spins. I'd just have to go for like the big splashdown. I think that would be my only hope.
A synchronized dive bomb from the 3 meter board.
I think so. I think that I could just about handle, but sadly, I don't think that's going to score very well. So
I'm not sure how sustainable that is. If you need to do 100 practice runs, no,
there'll be no practice. There'll be no practice. I'm just going to go straight in.
It's just a one-off.
One off, yeah, one and done. Although no, you have to do 3 or 4 different dives, don't you?
You do.
Yeah, I mean, I'd have to come up with just different iterations on the dive bomb, like one with like a half twist, one with like just like, I don't know. I'll have to think about it before the next Olympics. We've got a whole Olympiad to go, so plenty of time. Okay, well, that wraps up this week's Fintech Insider News. Thank you so much to today's guests. And where can people find out a bit more about you and your companies? Ross?
11fs.com or Ross Gallagher on LinkedIn.
Vadim?
Same. You can find me on LinkedIn or gmail.com.
Brilliant. And Claire, what about you?
Zopa.com or Clare Gambardella on LinkedIn.
Brilliant. And yeah, just a reminder for listeners to check out the survey that Claire mentioned at the start of the show. Really, really important initiative and one that we'd love to get your input and support for. And as for me, Kate Moody, you can find me on LinkedIn or you can drop me an email, kate@11fs.com. Thank you for listening. If you like what you've heard, please follow our podcast and don't forget to leave us a review. It helps us to make a better show and helps other people to find us too. As always, if you want to join the conversation, find us on social media. Just search for 11fs or Fintech Insider, or you can email podcasts@11fs.com. Thanks very much. Goodbye.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for ISO 27001, SOC 2, GDPR, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies like Atlassian, Flow Health, and Cora use Vanta to manage risk and prove security in real time. Our audience gets a special offer of $1,000 off Vanta at vanta.com/insider. That's vanta.com/insider for $1,000 off.
Keeping up with all the noise and news from the world of financial services isn't easy. It's easy to get lost in buzzwords, jargon, and industry speak. So sometimes you just need a quick human rundown of the biggest stories. Well, you are in luck. Bite-Sized is our very own weekly newsletter that takes the biggest news stories from financial services and tells you exactly what's happening, why it matters, and what comes next. Bite-Sized goes out every Friday at 11 a.m, so you can enjoy it with a coffee as you wrap up your week. Stay up to speed with the fast-moving world of financial services and subscribe today at 11fs.com/newsletters. That's 11fs.com/newsletters.